From the studios of Farm Journal Broadcast, this is U.S. Farm Report.
Welcome to U.S. Farm Report. I'm Clinton Griffiths in for Tyne Morgan, and here's what we're working on this weekend. Drought and dryness persists in the upper Midwest. We'll pour over prices and market action in John's World.
For farmers, there may be only two seasons.
More pork, but stronger prices. What's behind these market moves? Answers from the World Pork Expo. And Machinery Pete is on the road in central Kansas.
U.S. Farm Report, brought to you by the dependable, long-lasting Chevy Silverado.
Now for the news. It was a mixed week in commodity markets led by weather, crop conditions, and seasonal positioning. One of the biggest movers, spring wheat futures, the Minnesota wheat contract, trading up into the 640 range. Now, according to USDA's latest crop progress report, the U.S. spring wheat crop is in the worst shape in almost 3 decades. Just 45% is good to excellent. Much of the upper Midwest seeing some rain in the last few days, but it may be too late to save the crop. Speaking of wheat, that harvest moving into Kansas. The Kansas Wheat Commission says with hot, dry, and windy weather, combines are in full force, but USDA says they're running behind the 5-year average with just 4% harvested now. Oklahoma and Texas are well ahead of average. Nationally, 17% is now cut. Corn ticked down a point from the last week with 67% now rated good to excellent. Iowa, Minnesota, Nebraska remain strong while the East struggles. USDA also releasing the first soybean condition update of the season. 66% of that crop now called good to excellent. Cattle prices also trading off seasonal highs, trending lower this week. August feeders closing below the 50-day moving average for the first time since breaking higher in late winter. On the feeder side, the business holding well in the black. The Sterling Beef Profit Tracker putting feeder profit margins at just under the $500 per head mark. Cash profit margins for cow-calf producers in 2017 are expected to average $111 per cow. Now in other beef news, the U.S. finalizing details under a plan to send U.S. beef to China for the first time since 2003. And now that first shipment leaving Nebraska for China as a test. Greater Omaha Packing Company shipping 40 boxes of steaks by air. USDA posting the requirements for its export verification program for U.S. companies.
China is very interested in traceability. They want to be able to trace the origin of any beef that they import back to the U.S. or at least cattle that were raised on U.S. soil. So that's going to be one of the big obstacles here.
China has emerged as a major beef buyer in recent years, with imports increasing from $275 million in 2012 to $2.5 billion in 2016. Until the ban took effect in 2003, the U.S. was China's largest supplier of imported beef, providing 70% of their total intake. Meanwhile, new reports showing China is slashing corn output of their own. The latest forecast pushing the 2017-18 corn crop to its lowest level in 4 years. Drought and hail taking a bite out of planting in the northeastern region of that country. The Federal Reserve announcing a quarter-point rate hike Wednesday. As expected, the new range now between 1 and 1.25%. That's the first increase since March. The Fed believes inflation will fall well short of its 2% target this year. Now on the dairy side, USDA's latest WASDE report raising expectations for milk prices. The all milk forecast is expected to range from $17.80 to $18.20 this year and up to $19 in 2018. The increase based on higher cheese and component product prices. OPEC's plan to cut production to bolster prices may not have that intended effect, and it's due in part to higher output from non-OPEC countries like the U.S. Now in its monthly oil report, the International Energy Agency says production from non-OPEC producers could grow by 700,000 barrels daily and twice that amount next year. Those are the headlines. Meteorologist Mike Hoffman joins us now with a look at the weather week ahead. Mike, we've been watching the northern plains for dryness. Is there any rain in that forecast?
Thanks, Clinton. Although there are some chances, I'm not real hopeful in getting out of the drought conditions that are developing across the Dakotas, unfortunately. You can see, though, what a difference a week or two has made over Florida. Most of that drought is gone now as they've had a ton of rain. This is what it looked like 4 weeks ago. Lots of extreme to exceptional drought in that area, very little in the northern plains, but you can see how that's been expanding and it's been contracting in the southeastern part of the country. Still, overall, when you look at the lower 48, there is not much drought out there compared to what we typically see. Let's go day by day this week. I am looking for a cold front moving up and down the East Coast and Gulf Coast as we start today with cooler air behind it. It's going to be taking the place of all the heat and humidity you've seen across the northern plains and into the Great Lakes over this past week. Scattered showers and thunderstorms with that front. Secondary front diving southeastward. Just by the way, it remains hot out west most of this week. That first system moves into the northeast and the mid-Atlantic as we head into Wednesday with a chance for some showers and thunderstorms. Stationary front over Florida keeps it active there. And this is a pretty potent system as well. That starts over the northern plains. By Friday, it's over the Great Lakes and the cold front all the way down into the southern Mississippi Valley. Showers and thunderstorms along the front. Cooler air once again spreading into the northern plains as we head through the end of next week. The heat just continues, though, South Texas through most of the west. We'll be back in our next half hour with a longer range outlook.
All right, thanks, Mike. When we come back, our analysts will join us to discuss market action this week, and later, we take a trip to John's World.
Visit FarmJournalPro.com. Trusted analysis, professional insight. FarmJournalPro.com.
Welcome back to U.S. Farm Report. Brian Doherty with Stuart Peterson, our guest, and we have Brad Matthews with Roach Ag Marketing. Thank you both for being here. All right, guys, weather market or no weather market, what's going on with grains as we kind of wrap up another week and start a fresh week? Brian, we'll start with you.
Well, we're certainly in a weather market, for sure. We got some timely rains this week in parts of the Midwest, but you've got net drying in the West. It's just that time of year when things get critical. Couple that with a challenging spring with low stand counts in many states, areas that may have prevent plant corn. You're looking at a reduction of 4 million acres in corn to start from last year. There could be another 1 million to 1.5 million in prevent, let alone acres that switch to beans. So as weather goes here into late June and July, you know, be prepared for anything. Right now, we'd say conditions are less than ideal. The crop's late. The market's beginning to factor that in. We're seeing more buying on setbacks as of late, and when you get into this window, the next 6 weeks are really critical, so pay attention.
Yeah, Brad, as we look at kind of the condition rating of the crop, we have, you know, corn is 67% good to excellent, soybean 66, and spring wheat's at 45. What does that say to you?
Well, to me, it's kind of a big deal, obviously, in the wheat. I want to say it's the lowest good to excellent ratings in 29 years since 1988. Right now, corn really is in somewhat of a wheat-led market. Okay. I mean, you look at what Minneapolis has done. It's dragging Kansas City and Chicago. There's also quality concerns there. So there's not going to be a lot of high-protein quality wheat. That's helping the corn market. Big picture, though, you take a look at corn being at 65% or 67%, 8% below last year. I think it's 4% below the average. And you look at where a lot of that is in the East. You know, Illinois, Ohio, and Indiana. Right. The reason they are where they are is because of stand counts. And when you have low stand counts, that can't be fixed all of a sudden with weather changes. So in the Eastern Corn Belt, I just have a really hard time seeing the ability to achieve last year's yields.
Yeah. Do you agree there? And can the West make any of this up?
Yeah, you know, when you look at the crop ratings early in the season, boy, you have to take it with a grain of salt because the plant's young. We get heat units. Nitrogen kicks in, it grows fast, and it looks good. However, you get to mid-June and you've got 20% of Indiana rated poor to very poor. Right. You're not going to probably move that corn up into the good or excellent category. So it is a big deal this year. Plus the lateness to the crop, it's susceptible to heat. You've just got a lot of issues. We've kind of likened it to a spring that can uncoil. This corn market has had 4 down years of price. We've built a demand ship that's starting to move forward. We've got record demand, so there's a lot of good things percolating under the marketplace. The managed money has stayed short, but that's starting to move out. And so I don't want to overpromise and underdeliver here, but you've got all the setup for a pop in the market. The key is how do you handle it as a farmer? If we get up to that 415, 430 area, what do you do with it? And so we think it's key to keep a balanced approach.
Yeah, as you start to watch this weather market unfold, is it now or is there a time period of what you're looking for here?
It's a good question. I would say that, you know, if the weather that they're calling for come late June, early July actually takes place, where they're talking about maybe another ridge, more heat, a lot of it's supposed to be more in the Western Corn Belt, more dryness. If there's that threat, then it's happening soon. If it's not then it might be until the combines roll and they say, oh, wow, you know, my yield's not quite what I was expecting it to be. It's below last year, and it could be a post-harvest rally. It will be about the weather, and that's why I agree we are in a weather market.
Yeah.
Well, if you look elsewhere around the world too, China's cut its corn production already a little bit. You've got dry issues starting to percolate elsewhere. Wheat's really starting to grab hold. So it's a good story from a pricing perspective. We're starting to see some things finally develop in a market that's been sideways. Again, the key, though, will be the balanced approach, because as we move higher, there's going to be that temptation, as farmers ran into last year, not to reward the rallies. We think you need to reward the rally, but maintain some ownership. And so look at call options, things like that, so you can sell aggressively but retain the ownership. We could get a real bull run if weather grabs hold. We haven't had that since 2012. Going on 5 years, we forget how fast prices can move.
Yeah, I mean, we were talking earlier, 2010, was a year where we saw a lot of movement.
2010 is somewhat similar. I mean, it started with a wheat-led rally as well, out of dryness from Russia, and then all of a sudden combines started to roll. They realized we didn't have the crop here, and you started off, $4 corn. By the end of the marketing year, you were over $7. I'm not saying you're going to $7 corn, but we still have a lot to get through in weather. We don't know what kind of crop we have. We do know we're not going to have the wheat that we had last year. And I agree with him. It's one of those things where you have to make sure that you do give yourself upside. The key about call options, in my opinion, this year is make sure you have plenty of time on them.
All right, gentlemen, we'll have you back here in just a second, talk a little bit more about this and many other things. We'll be back with more Farm Report in just a minute. Welcome back to U.S. Farm Report. Brian Doherty, Stuart Peterson, and Brad Matthews with Roach Ag Marketing, our guest. All right, gentlemen, we talked a lot about corn. Let's talk about soybeans. That crop also kind of getting a late start, but we expect lots of acres this year. Where do you guys stand on that?
Yeah, yes.
Yes, yes to all of that?
Lots of acreage, yes. The incentive was there early in the year. The board was trading over $10, the price ratio, corn to beans. I think the financial community probably swayed some producers to think about beans over corn. So you got a lot of things there, great demand in that market as well. And so when you look at that bean picture, the world supply is all of a sudden ballooning. The key will be the U.S. crop, of course. As weather goes, so will price. $9.50, $10 beans, though, you should be rewarding that rally on November. Assume a normal crop until proven otherwise. We're starting to see here in mid-June some private firms with satellite imagery and things like that trying to estimate yield. It's still really early for that. Beans have a tendency to do a lot better, I think, than people give credit to early on, and then the weather in July and August. So right now, reward the rallies. If need be, cover them, but there's going to be a lot of bean supply unless proven otherwise.
Brad, do you agree?
Yeah, I would agree. I mean, there's going to be the acres. It is all about weather, what the final yield is. I mean, you add a couple bushels, that's 180 million additional carryout. You take 2 bushels off, it's 180 million off the carryout. So it is all about weather, but we will have the acres. So with that being said, the funds do have a very large short position in beans. They also have a very large short position in soybean meal. They went from 73,000 contracts long in March in soybean meal to 50,000 short. That's pretty big, and that's a lot in a short time. Meal's the leader of the complex. So I think you're due for short covering rallies, but they're probably going to be nothing more than that. So I would agree. You get your summer rally in soybeans, the weather premium, short covering, you got to do something about it.
What's your final acreage number?
I think we're going to be somewhere around that 90 million, 89.5, 90 million.
Yeah,
well, I think we probably pick up 5 million in beans compared to a year ago, and so I'd agree with that. The thing, too, we talked about the funds and the managed money. They've been so short agriculture for so long that, again, if they decide to unwind or go long, things could get pretty violent in a hurry, and the market likes to buy beans. So I would be very careful if I'm selling aggressively into this to make sure, again, to have some coverage. Probability studies, even though it doesn't seem likely, suggest there's a 70% chance we'll see a 12 in front of beans sometime this year.
As we start talking about some of the other players in these markets, the end user, those with livestock, where do you sit as far as watching this and getting prepared between now and harvest?
Livestock, I think a lot of these guys are going hand to mouth. I think a lot of end users in general have been going hand to mouth, and that's one of the things that could get these markets exciting if there starts to be a weather problem, because you have a lot of end users who will start purchasing a lot more of their needs instead of this hand to mouth that they've been doing.
Yeah, you agree with that?
Totally. We've been for some time 100% covered on feed needs. Limited downside potential. How much can corn go down from $3.75? 50 cents? What's the potential for this thing to really move somewhere and see $5, $6 corn? I don't know, but it's been there before. When things start to move, it always surprises people how fast things can move. So you should just cover it. We've got too much uncertainty this spring not to think that way.
Yeah. Cattle markets overall, what do you think? The last week or so, we've kind of seemed like we've hit some highs. Maybe now we're starting to trade down off of those?
Yeah, you've got a lot of things. I mean, we can go back to February in cattle and start out with dryness in the south and in the north, and then the fires, and then we had that late spring winter storm, tainted beef in Brazil, Trump making headway with China, and China now importing beef. All these bull factors and a big bull run, and the funds going aggressively along the market. Yet, what did we get here recently? We've got a double top on August cattle. Yep. Big bearish key reversal. The handwriting's on the wall that demand may not be able to chase this market forever. So I'm encouraging producers to be smart about this, buy puts, protect the bottom line, leave the top side open, but I think the high is probably in on cattle.
What do you think about that?
I agree 100%. We talked earlier. I would say the party's probably over. I think the high is most likely in. I think we're due for a bounce, but the long-term direction I think is down.
Brad, as we kind of start preparing for another week, getting ready for this week, any advice for what people need to be thinking about?
Producers, I guess, as we were talking about in the Eastern Corn Belt, big picture, what I'd be thinking about is kind of like 2015. We didn't have the crop in the East, and one of the major things in the cash market that we saw was after you got through summer and you got through harvest, major improvements in the basis. So if I'm a producer in the Eastern Corn Belt, what I want to be thinking about if I have on-farm storage is I do not want to be making any sales this summer that are cash sales. I want hedge to arrive contracts because I want the ability to take advantage of the basis appreciation that I foresee happening in the Eastern Corn Belt.
And we'll be back with more U.S. Farm Report and get their final thoughts in just a second. Stay with us. Welcome back. Time for Markets Now. Let's start with Brian Doherty. Brian, what do you think?
Well, we're at that time of year. Last year we peaked in the corn market here toward the end of June. And, you know, on a Friday you went home, or you, as a farmer, you went into your house, you shouldn't have sold anything. By Monday you should have sold everything. Darned if you do, darned if you don't. So the stress point that I think is key is to have a balanced approach and reward these rallies. We've got big inventories coming into this year. We've got uncertainty with weather. We've got growing demand, yet we're likely to see volatility. So the key is reward the rallies, retain the ownership when prices move higher, buy puts to put a floor in. Get yourself really balanced. You're not going to be able to outguess this weather. We've seen that already this spring. Anybody that can outguess this weather is, I guess, more man than me. But that's the nature of what we do in agriculture, is deal with weather, and how a balanced approach is the way to handle that.
Brad, real quick, what do you think?
I would agree a lot with what he's saying. I think that there's going to be more opportunities for rallies this year than what we saw in the previous years. I think the big picture story is shaping up to be a lot more friendly than what we've seen. It doesn't mean it has to happen right away. But even with a 171 yield, basically where we're sitting right now, if they don't reduce acres, you're still watching the carryout shrink. You're still watching world carryout shrink. So if you get a rally, you do need to do something on it. But like we said earlier, give yourself some upside, because you never know when it's that year, when it finally changes.
And hopefully it will be that year. Thank you both for being here. We'll be back with more U.S. Farm Report and John Phipps right after the break.
Get the roots your crops need by getting Radiate first. Visit lovelandproducts.com/radiate. See your CPS dealer today.
'Tis the season as we step ever so gingerly, or not, into the throes of summer. And while most of us have 4 seasons to consider, John Phipps only has 2 in his world. John?
Over my years, I have simplified my view of nature. For example, I have reduced the number of seasons to 2. The season when I worry about the weather, and the season when I don't. Now, the latter begins with the last field operation in the fall and ends about mid-February or March as we get the urge to get growing. Right now, this is the other season, weather worry season. And for those like me who fret for a hobby, technology has given us a lot of new tools to feed our anxiety. There are many more weather models, for example. There are comparisons between the models. There are short and long-range forecasts, global weather patterns, and climate trends to monitor. Meanwhile, back on the ground, we wade through data on ground moisture levels, crop conditions from satellites and drones, and of course the forecast and opinion of meteorologists. The odd thing to me is, even as our ability to predict the weather has advanced significantly in my lifetime, it hasn't reduced much of the fussing about what the results of the weather will be on our farms. If anything, it simply moved our anxiety boundary out a few days. In essence, we've developed the pattern of living in the future instead of the present. I'm not suggesting ignorance was bliss back in the days of weather forecasting by going outside and looking at the sky. But the what are you going to do about it fatalism of those days probably freed up a lot of time to do other stuff. Or to better yet, just kick back and do absolutely nothing. Or as it's called today, fishing.
Now that sounds like as good a way to waste time as I've heard. Thanks, John. Still to come, taking the long look at the recent run-up in hog prices, and we'll check in on machinery trends in Kansas as we go on the road in Machinery Pete. Stick with us. We'll be right back.
U.S. Farm Report is produced and distributed by Farm Journal Broadcast. From the studios of Farm Journal Broadcast, this is U.S. Farm Report.
Straight ahead on this half hour of U.S. Farm Report, checking in on the farm economy.
Cooler air at times for some of the northern portions of the country. I'll have my forecast for the week coming up in weather.
John Phipps takes on Medicaid and long-term health care, and step on board with this 1938 Allis-Chalmers Model A for Tractor Tales. Now for the headlines, the latest Rural Main Street Index showing the rural economy stuck in neutral. The June survey from Creighton University shows the index dropping slightly to 50 right at the midpoint, indicating growth neutral. Due to weak farm income, almost 1/4 of bankers report rejecting a higher percentage of farmer loans and loan applications, and about 60% report boosting collateral requirements on farm loans. On average, bankers project farmland prices will decline by another 3% over the next 12 months. And more than 3/4 of bank CEOs say a shortage of qualified or skilled workers is having a negative impact on economic growth.
I think the president understands that the prosperity and recovery has not been uniform, and he understands that many people, and I gave you some statistics about rural poverty and 1 in 4 children, and we look at the employment numbers, they've not come up to pre-2008 in rural areas.
Secretary Perdue made his comments following the inaugural meeting of the Interagency Task Force on Agriculture and Rural Prosperity. The meeting including several cabinet secretaries who are charged as a group with improving the quality of life for people in rural areas. On the mega merger front, DuPont and Dow Chemical getting the green light from the Department of Justice. They had already agreed to divest portions of their businesses. The merger currently has approvals in the U.S., Europe, Brazil, and China. They hope to finish the deal in August and spin off into separate businesses within 18 months. Meanwhile, Bloomberg reporting BASF and Syngenta both submitting preliminary bids for Bayer assets. That company intending to offload several properties as it seeks to join forces with Monsanto. The $66 billion takeover deal still needs regulatory approval. Bayer planning to unload canola, cottonseed, and its LibertyLink assets. Meanwhile, China announcing approval of 2 new traits. Dow Enlist package is now approved for corn, allowing farmers to use a dual herbicide that contains 2,4-D-choline and glyphosate. The company says it will launch Enlist corn in the U.S. and Canada in 2018. China also approving Monsanto's Hyolake Vistiv Gold soybeans. A major shakeup in the grocer sector. Online giant Amazon announcing Friday it will purchase Whole Foods Market. It's a deal valued at nearly $14 billion, including debt. Amazon.com will pay $42 a share for Whole Foods Market. That's 18% above Whole Foods' closing price on Thursday. Interesting. That's it for news. Meteorologist Mike Huffman joins us now with a longer look at the weather. Mike, as we hit mid-June, is there any type of pattern setting up, either more wet or more dry?
Well, Clinton, overall, the next couple of weeks look like we get into a little cooler weather pattern in the northern plains, Great Lakes into the northeast. Now, that usually keeps it dry, though, as well, so that shoves the better chances for rain farther south. It stays hot out west, and here's why. You can see the big ridge just going to hold its place. Even though there's a big trough developing in eastern Canada with pieces of energy diving into the northern plains, Great Lakes in the northeast every 3 or 4 days. You can see the next little batch on Wednesday diving in Thursday and Friday, and that just keeps the trough, keeps a cooler weather pattern for much of the northeast quadrant of the country as we head through the rest of this week and into next weekend as well. So my forecast for the next 30 days, I'm going above normal for most of the west. I'm going to bring that across the dry areas of the Dakotas into Minnesota as well. Below normal for the southeast, and that's mainly because you'll have above normal rainfall, which even though it'll be warm and humid, it just won't be quite as hot. And then you can see a below normal expected precipitation for much of the west. We'll go near normal far west, but you typically don't get a whole lot this time of the year anyway. Clinton?
Last week, Des Moines, Iowa played host to the annual World Pork Expo. From food to trade shows, competitions, even policy meetings, a lot happens at the world's largest pork-specific trade show every year. Now, at this year, values are turning heads. Lean hog contracts continuing to linger near the $80 mark, a price some didn't expect to hang on this long, especially with a flush of pork on the market. National reporter Betsy Gibbon was at the expo talking to experts about this recent run in prices.
A flush of U.S. pork is on the market. But pork industry experts say the reason prices continue in the green is not because of supply, but demand.
15% more exports of pork. Strong demand is sure how we would explain the situation of more supply but even higher prices.
Experts say the increased appetite is global, and pig supplies are not getting smaller anytime soon.
We're going to produce 4% more pork this year and 4% more pork next year. We're going to be pushing that per capita offerings up there around 52 or even over 52 pounds per person, which is about as high as we've ever seen.
When it comes to prices, Meyer believes prices could eventually decrease a bit come fall, mostly due to seasonal buying.
You're getting some very good pricing opportunities from the futures right now. 2018, those prices look pretty good to us as well.
So what we're anticipating this year when we're talking about $8 to $10 higher prices than year ago in the third and fourth quarter, this year versus last year, we think a portion of that is attributable to these new packing plants that are going to be online.
Even though there are a handful of processing spaces coming online this fall, some analysts feel as if it still won't be enough and it will pressure prices.
If we were to fill all these plants up in 2019, we would have about 10% more hogs than we had last year, plus any gains in weight. And that would be a very rapid output expansion that, say, oh, well, we'll export it. Well, the export market isn't limitless.
The pork groups are working on growing those trading relationships with the top priority of making sure Mexico, the leading volume market for U.S. pork, keeps buying. The pork industry wants its hand on the North American Free Trade Agreement to be left alone.
We probably would have lost that market had we scrapped NAFTA entirely. Renegotiating, we're not looking for anything but what we have today.
President Trump is also vocal about bilateral trade. Pork leaders want to deal with Japan, the #1 market in terms of U.S. dollars.
We've got everything going for us in Japan other than the fact that we don't have an FTA, which ultimately eliminates trade restrictions and barriers to entry and would get our quotas and duties down to zero over a 15-year period. And we also know that pork prices in China the last 4 or 5 months have been coming down, have been falling, which makes it a little tougher to get product in there.
A balancing act between increasing production and expanding trade for the benefit of the industry. Reporting at World Pork Expo in Des Moines, Iowa, I'm Betsy Gibbon.
All right, thanks, Betsy. Meyer says there are other export markets gaining steam, including Australia, Honduras, the Philippines, Dominican Republic, and Colombia. And when we come back, customer support with John Phipps.
Visit FarmJournalPro.com. Trusted analysis, professional insight. FarmJournalPro.com.
Your call is very important to us. Please hold.
As you know, John Phipps likes to take on very simple, uncomplicated topics. Well, like Medicaid and long-term health care. Here's John.
Okay, I received several questions and comments about medicated nursing homes, and I'm waiting for final legislation from Congress to answer them. But I can tackle this one on long-term care insurance from Eric Lang. Hindsight indicates that many would have been better off with a low-cost term life policy, no cash value, and separate coverage for physical disability and the need for a nursing home care in old age or earlier. Alzheimer and the associated care costs will burn through 160 or 240 acres in a few years. Nursing home insurance mitigates that risk and is useful while one is still living, unlike life insurance. So is the case with a serious farm or other accident or disability insurance. Thank you for the information and the question, Eric. Insurance decisions are shaped by individual risk tolerance, and long-term care insurance, LTCI, is no different. Let's throw some numbers out. The most common statistic you will see regarding long-term care is this one. 70% of those who reach 65 will need long-term care, but because of how LTCI is written, only 35% of those who buy insurance at age 60 actually receive any benefits. Mostly this is due to a 90-day waiting period before benefits begin. It's also because 10 days of care recovering from an operation, for example, qualifies as long-term care. So that 70% number is somewhat inflated, in my opinion. LTCI has presented problems with benefit caps, complicated benefit procedures, and companies going bankrupt. Here are some other numbers to keep in mind. The average cost of skilled care in a nursing home is about $90,000 per year, with extreme variations between states. The average stay is less than 3 years, with only 12% lasting longer than 5 years. Those situations tend to stand out more prominently in our thinking, however. Almost forgotten is most long-term care services are delivered at home, and those average over $40,000 per year. Nursing home insurance is expensive, running $3,000 to $5,000 or more per year, and premiums have been escalating sharply. Whether it is worth it is a difficult call. Hybrid products of life insurance and LTCI are much more complex and have not been around long enough for good analysis, but they might be helpful. The most important point for farmers is schemes to reduce your assets like farmland so that you qualify for Medicaid for your nursing home care may not be viable options if possible Medicaid cuts are enacted. If that happens, LTCI may merit a second look.
Perspective only John can give. Thank you, John. Now, before she left, Tyne Morgan hit the road with Machinery Pete. We'll talk equipment trends from the heart of Kansas after the break, and later, a 38 Model A rolls through tractor tails.
On the Road with Machinery Pete is brought to you by John Deere. Nothing runs like a Deere.
There was no shortage of rain in Kansas this spring. While it created a few hiccups for planting, it also created a few challenges for custom harvesters this year. But so far, feed quality of this year's crop is on par, and demand for choppers at equipment dealers like Prairie Land Partners is picking up. This week, Tyne Morgan and Machinery Pete are on the road in McPherson, Kansas, where 2017 is off to a solid start.
Looks like they're starting a new field.
Technology is changing the game for Sam Shipper's business.
They're setting up the new field name and the farmer.
As a custom harvester, he's on the road 8 months out of the year.
I will see the instant moisture, the average moisture, the yield.
But it's being able to track things like moisture and yield from his phone, helping his crew become even more efficient.
We're a 3-chopper crew. We'll run up to 20 to 25 semis.
From Texas all the way to Kansas, when it's busy, his crew is running nonstop.
It varies, but on an average, I'm somewhere between 950 to 1,200 hours a year per machine.
In Iowa, Gary Wickers works on an 1,100 head dairy, running 1 chopper for feed each year.
Probably put 200 hours on it a year, so usually it'll be about 800-900 hours on it when we trade it off.
This year, hay season is already underway, with Wickers first cutting under his belt.
The hay crop's been pretty good. Yeah, it's been really good.
Meanwhile, Shippers has already been in the field for about 3 months. While miles away, both operators turn to Prairie Land Partners to do business, and Uriah Miller says it's technology helping raise the bar with quality feed.
With the technology we have now in these choppers, than making wine. You know, you wouldn't use sour grapes and expect good wine, and with the technology we have now with constituents, we can monitor the starch, we can monitor the protein, the moisture, even before it ever gets to the pit.
And it's gone to the point now in the fall where they don't even check my moisture at the feedlot.
Whether it's running a 3-chopper crew or just operating one machine, both say they can't afford downtime.
When you're chopping irrigated corn in the Corn Belt, in the daylight hours, it's somewhere around $18 a minute I lose.
It's these operators creating the strong demand for choppers right now.
I hear a lot of custom guys that are saying their dairies are expanding.
So the ease of selling the new choppers, I don't know if it's a surprise, but it certainly is something that kind of hit us a little bit. We probably should have cleaned up our used inventory a little quicker.
Machinery Pete says the chopper market is a tricky one to track.
What's interesting with choppers, a little bit like planters, I think, where you'll see the demand to buy new can be very strong. You'll have dealers that maybe don't have enough choppers to sell.
Depressed commodity prices have made equipment a tough sell for the past few years. Each month, Creighton University puts out a rural Main Street index, providing a pulse of the ag economy through the eyes of rural bankers. The latest showed ag equipment sales index jumped to its highest level in more than 2 years.
And it actually jives perfectly with the quarterly index we put out. And our index started to inch up in November.
But he says there's still plenty of used equipment to buy.
We're still recovering. There was a lot of used equipment on dealer lots 4 years ago when commodity prices fell. And it's been a process to get that cleared out. And it's not solved, but it's much better.
We're seeing a little uptick in some of those areas, particularly small tractors under 120 horsepower. We've seen a little uptick maybe in, even recently, a little bit more interest in the hay side because the cattle prices are a little bit better.
While the rest of 2016's story is still untold, plentiful moisture and the promise of a bountiful wheat crop is moving moods in Kansas. Reporting from McPherson, Kansas, I'm Tyne Morgan.
All right, thanks, Tyne. Now tune in next month. She goes on the road with Machinery Pete to Mexico, Missouri. When we come back, Machinery Pete rejoins us for this week's Tractor Tales.
This is Machinery Pete, inviting you to check out my new website, machinerypete.com. Offering farmers tens of thousands of used equipment listings to search, let Machinery Pete help you find and value your next piece of used equipment.
Time now for Tractor Tales with Machinery Pete, the most trusted name in farm equipment.
Welcome back to Tractor Tales, folks. This week we're off to Missouri to check out an A, which stands for Allis-Chalmers. David Maddox found this classic Allis in a field with 4 other A's. He came home with this one and is proud to have it in his collection.
What we've got here is a 1938 Allis-Chalmers Model A. There were only 1,200 of those tractors built, and there's been quite a few lost through the years or scrapped, so we're not certain how many still exist. This tractor was found on a wheat farm in southeast Colorado. I think it was in 2005. When they found it, it was on an old abandoned wheat farm, and there were 5 of them sitting there. And they got to looking at serial numbers, and they keep a serial number registration of all these A's. Nobody had ever found the last A. They got to looking at serial numbers, and that tractor was in that group of tractors. No, I don't own that tractor. My pockets weren't deep enough to own that one, but it ended up going up into Canada. We kind of went through it and fixed it up, and the transmission was in really bad shape, and we had to find some transmission parts for it, and luckily I knew the right people to call, and we found what we had to have, but those parts are really hard to come by now. And then other than that, just clean it up and paint it and put new tires on it and little machine work on the front end to make it tighter. But other than that, it was a pretty straightforward restoration. On the seat cushion, I had the occasion to see an original seat cushion to one of these tractors. There wasn't much left to it. It was just flat as a pancake. Around the seams of the cushion, they had an orange piping, and then of course black vinyl. But so all my seats, padded seats that are like that, they've got the orange piping around the seams. We're kind of just glad to have it and have it running.
All right, thanks, Greg. Today's Country Church Salute goes to St. Jane Frances de Chantal Church, located in Randolph, Nebraska. The congregation is celebrating 125 years this summer. Congratulations, and our thanks to Deacon Doug Tunick for sharing their story. As always, we want to learn about your home church as well. Salutes can be sent to the address on the screen. Be sure to stay with us from the Farm Photos. Coming up next. Welcome back. Of course, Mike and I like to end the show with a collection of fun from the Farm Photos. Mike?
I wouldn't call this necessarily fun, but it is pretty amazing. Some of these pictures anyway. Look at this from Chris Clifford on Twitter. A wind turbine toppling this week near Diller, Nebraska. Chris hadn't heard what ultimately caused the tower to fail, but the company told news outlets it happened shortly before 5 a.m. Tuesday. The wind farm is located on about 10,500 acres of agricultural land in Jefferson and Gage counties.
Wow, looks like the wind got let out of it. And I'm sure many of you observed Flag Day this past week. Wes Mills sharing this beauty from his front porch. And we end with a fresh parody from our favorite Kansas farm bros. The Peterson brothers, they're in love with the residue.
This is great.
With the cover, oh why, oh why, oh why, oh why. I'm in love with the cover, oh why, oh why, oh why, oh why.
Talking a little soil health and cover crops on that one. Nice work, fellas.
Those guys are great. I actually just found them 3 or 4 weeks ago on Facebook.
Yeah, they've been around a while and they do a good job.
I know, it just took me a while.
Well, from all of us here at Farm Report, I'm Clinton Griffithstein. We'll be back next week. Thank you for watching us and have a great weekend.
U.S. Farm Report, America's longest-lasting news program for farmers, is powered by Ram Trucks, America's longest-lasting pickups. U.S. Farm Report is produced and distributed by Farm Journal Broadcast.